I am looking at a 2-minute chart. Each bar represents 2 minutes of trading. There are two key moving averages on the chart. That's the 20-period moving average. That is going to be your blue line here. And I've got the 200-period moving average. These are the staple moving averages on all time frames. All right, looking at the 2-minute chart. Now, I want to go back to the origin of today, and I want to reveal to you what the state of the market is before the open. So if we go back to the open, I want you to pretend as if this first bar didn't exist yet, right? So this first bar doesn't exist. I'm going to take that away, make it easier for us to look at here. All right. Now, I want you to, a quick and dirty way of finding out what the state of your stock is in any part of the day actually, but certainly off the open, is to determine, a quick and dirty way is what's the slant of both my moving averages. So I've got the 20 and the 200. What's the distance they are apart from each other, and what is their state? Are they more 45-degree angle to the upside? Are they more 45-degree angle to the downside? Or are they somewhere in between? All right. So this would be 45 degrees to the upside. This would be 45 degrees to the downside. And if you're not that steep, then you're either flat or relatively flat. Okay. So out of these scenarios, you would have to say you're relatively flat. I don't want you to be so particular where you say, no, Oliver, that's sloping upward. Yeah, but it's not sloping upward at 45 degrees. Oliver, that's sloping downward. Yeah, but it's not sloping downward at 45 degrees. So I want you to use 45 degrees as your base case for, is my moving average a trending moving average, or is it kind of in limbo in between? Ever since I introduced this idea that I don't like really slanted 200s at the open so much, I've seen some traders start to take this too far. Like every little slant in the 200 is like they nix the stock, and that's not good. So I want to give you a guideline of what truly is slanted, and that's 45 degrees. All right. So if we're not talking about like that type of angle, there's no slant. All right. We can't be that particular. You can't be that exacting in the stock market, or in any market for that matter. You're going to drive yourself crazy. So because neither of these moving averages are steep enough to meet that 45-degree angle requirement, they're flattish. Okay. Now, so we've established that the moving averages are flat-ish and they're close together. So basically, this is your quick and dirty way of determining what state your stock is in. All right. Moving averages close together and they're flat-ish. So you've got a tight, narrow Fab 4 scenario, or you've got a tight, narrow state. All right. This would be considered tight. All right. So in reality, I usually call it the Fab 4, but you can do a quick and dirty one just with the moving averages. If they're close like that, tight. If they're flattish, then you've got a tight, flat state. Okay. And that's a quick and dirty way of determining your state. How do you determine when your moving averages are flattish? Because I started seeing traders call it, Oliver, I don't like this because my 200 is slanted. No, dude, that's flat. It's slanted if it's 45 or deeper. This is flat, guys. All right, this is flat. All right, so I hope the 45 degree has cleaned up this being too precise with this flat versus trending moving average. You take a look at the state of the stock at the open of the day. And how do you quickly do that? A quick and dirty way of doing that is to grab the 200 and grab the 20. All right. And so they're not that far apart, but you can see that the really narrow part was here, where they're really close together, and it's just starting to separate. So you're at the beginning of a possible move away. So remember when I told you that markets start from narrow and they start going wide this way, or they start going wide that way. So what you see here in this state is that square is starting to go wide this way. All right, it's very clear. Now, at the open, okay, at the open, square opens right at or near the 200 period moving average. Now, this is extraordinarily important. Why? Because it's one of the categories that you should be preparing for before the market opens. There are 5 to 10 minutes before the market opens, you should be looking for anything that is indicated to open at or near a 200 period moving average. So square should be on your list before the market opens. Yes, you can know where a stock is likely to open before it opens. You don't have to wait for the open. You can look at the last pre-market trade. Most trading platforms will show you a black arrow on the chart where the stock is trading pre-open. Now, be careful here. I don't want you looking at pre-market data. That's very different because that will skew your moving averages. Write this down. Turn pre-market data off on all your platforms. Do not look at the market moving up and down before the market opens. That's going to skew your moving averages and make them wrong. So you don't look at the data, but you don't chart the pre-market data, but you can determine where is this stock trading 5 minutes before the open. What's the last trade? And if that last trade is at or near a 200 period moving average, you pull that out of your list. That goes into a very special watch me at the open list. You need a watch me at the open list. You have your overall family list, right? You have your family of stocks. And let's say there's 10. You get the point here, right? But you can't focus on 10 at the open. So you might say, all right, look, this one is opening at or near the 20. I got to put it in this list. And maybe there's another that's another category that's a watch me at the open and another. And so these three get pulled out of your 10, and this becomes watch me now at the open. You should never be trying to manage 10. You should be trying to manage 3, 2, 3 at the open. But there are a variety of categories that are watch me at the open categories. We're going to talk about this one today, which is open at or near the 200 category. And anytime you can get an advanced view of a stock that looks like 5 minutes before the open, this is going to open somewhere around a 200 period moving average. You pull that out of your list, buddy. That's important. Now, so square should have been identified, if this were a stock in your master family list, as opening at or near the 200. Now, what's the state of the 200? This state of the 200 is relatively flat. And I've always told you the most powerful 200s are relatively flat. They don't have to be exactly flat like a straight line, but relatively flat 200s represent the most powerful 200s. And so square is opening for the day at or near a relatively flat 200. That's very powerful. That's on your watch me at the open list. All right. Now, I have taught you many times that one of the most powerful things that can happen for you at the open, or any time in the market for that matter, is a surge from the 200. Guys, listen to me carefully. This is one of the most powerful things you can identify. A surge that originates from at or near the 200 up, or a surge to the downside that originates at or near the 200. This is one of the most powerful occurrences out of all occurrences in the market. You have to understand this. And this is why it's one special category in your watch me at the open session, because it produces one of the most powerful events. Not always, but it might. So as we can see with Square, we got the surge from the 200. Now I'm going to pretend like this didn't happen. Let's take this off. So there's your first 2-minute bar, guys. It's violent, it's powerful, it's clearing in nature. It's a surge off the relatively flat 200. There are very few things, if any, more powerful than this setup. So look, take a freaking snapshot of this right now. Another thing that I want you to take a note of, when you get a surge off the 200, it doesn't matter. Position doesn't matter. Write that down. Surges off the 200 cancel everything else out. I don't care if another 200 on another time frame is nearby. It doesn't matter. I don't care if it's in the trap zone. Doesn't matter. I don't care if something's blocking it. It doesn't matter. A surge off the 200 is so powerful, it cancels out any other concern that you have. Any other thing that can potentially stop it doesn't matter. So make sure you make a note of that. Surges off the 200, cancel everything out. Doesn't matter. Nothing of concern. But Oliver, the market's going up. Doesn't matter. It's a surge down off the 200 short. But it's in the trap zone. Doesn't matter. It's a surge off the 200 short. But Oliver, the 200 on the 15-minute chart is right there. Doesn't matter. Surge off the 200 shorter.